First of all, let me thank. I share my presentation.
Yes, we can see
it. Okay. Let me thank Professor Maria Felice Arezzo, for the coordinator of this project, for this welcome invitation. The participation in this webinar represents for me an important opportunity for reflection and for discuss on issues on which I do research. In fact, briefly, I promise, I'm an economist and I teach in our master degree a very particular course. In fact, I teach a course on economics of crime and illegality. And this reason I teach such a very particular course is that my research is mainly focused on the economic analysis of illegal behavior, and with a focus on corruption, fiscal evasion, tax compliance, money laundering, and fraud, and so on. This is why today in my speech I focus on one of the most important and relevant, unfortunately, economic crimes, that is tax evasion. And it's important to stress that there is a strict link between tax evasion and fiscal fraud, because tax fraud is one of the most many channels through which to put in place fiscal evasion. And in this today, in this briefly overview of the, I'll try to give you I present you the principal determinants of illegal behavior, and in particular tax evasion. And clearly the analysis will be carried out in the economic terms mainly, and with the typical tools of the economic analysis. But it's important before to underline the difference between two concepts very related to taxation, that is tax evasion and tax avoidance. And following the definition of Transparency International, that is an international non-governmental organization that deals with corruption, but in general with illegal behavior. We can consider tax evasion as the illegal non-payment or underpayment of taxes, usually by intentionally submitting false or incomplete declaration to the fiscal authorities. And this may include both underreporting profit, income, gains, or by overstating deduction. It's important to stress that this is an illegal activity, while tax avoidance is a legal activity, and that trying to minimize a tax bill by exploiting a tax loophole or exception to the rule, or adopting an unintended interpretation of tax, the fiscal rules. And in general, we refer to the practice of try to avoiding to paying taxes, complying with the letter of the law, but in reality being opposite to the spirit of the law. Unfortunately, providing intention is very difficult, because the line that divides tax avoidance and tax evasion is very difficult to see. It's well known to all of you, I think, that all modern societies try to collect the tax revenues in order to finance the provision of public goods and services, like, for example, transportation, defense, the health system, or the educational system. However, almost all economies also suffer from a very important level of non-compliance in paying taxes due. And it's important to stress that taxation and evasion are two strictly related phenomena that find their origin at the same time, and very often one as accompanied by the other. And before I give you some quickly data on the dimension of the evasion, let me define the principal indicator of evasion, that is the tax gap or revenue gap. That is an estimate of tax evasion, in that it provides an indication of the measure of voluntary adherence, so-called compliance to paying taxes. Therefore, the tax gap is the difference between the taxes that are actually collected by the fiscal authority and those that will be collected under a regime of perfect spontaneous compliance with the existent regulation. And as already mentioned, evasion is a very relevant and widespread phenomenon, but it is also transversal in the sense that it concerns both poor and developing countries, but also rich and developed countries, like, for example, our countries, Italy. In fact, as Murphy showed, the tax gap is very high for the the country of the European Union. And in particular, if we consider the VAT gap is estimated to be around 60.6 billion of euros. And the VAT gap is the interesting VAT tax gap, because VAT is value added tax, and in the European Union is a general, widely based consumption tax related to the value added to goods and services, and is almost uniform for all European countries. Therefore, it's possible to do comparative estimation for all European countries. And unfortunately, of these 60.6 billion of euros, 14.6 billion are found to be missing in Italy. Therefore, for Italy, the tax evasion is very relevant problem. And in this figure illustrates the VAT gap in 2021 for European country. And as we can see, the Germany, which is a larger economy than Italy, both in terms of GDP and population, has a VAT gap that is half of that of the Italy. And it's not a very good result. But the theoretical economic literature starts, and this very briefly overview, I promise, start from the pioneer paper of Halligan and Sadmo, who applied the Gary Becker's model to a problem of tax evasion. The model of Gary Becker is the first model of economic analysis of crime. In his paper, Crime and Punishment, an Economic Approach, Becker studied the decision of an agent, a rational agent, who must decide whether comply with the rule or not. And Halligan and Sadmo study a decision of taxpayer in a rational way, and try to explain how the taxpayer decide whether to evade or not, comparing the benefits of evading taxes with the expected cost of being discovered and then perhaps punished for the evasion. They consider rational behavior, in fact, use in their analysis the standard expected utility theory, and is the first model that try to explain in an economic framework the decision of evade. And therefore, this classical paper show us that in order to reduce, to combat, to eliminate tax evasion, the classical instruments identified by classical analysis are represented by the typical tools of deterrence, of the enforcement. That is principally the probability of being discovered and punished, and the dimension of the fine envisaged for tax evader. But unfortunately, the problem is that the data do not confirm the result of the theoretical model of Halligan and Sadmo. In fact, as general trend, the model seems to predict a very, very widespread evasion, since in matching with the real data, the results are in important ways smaller. In fact, using the actual audit probabilities and penalty rates, the return on evasion is very high. It goes from 91% to 98%. So the fundamental question is understand why do most taxpayers not evade, fortunately. And in addition, regarding the Halligan and Sadmo model, this model predicts a negative relationship between tax rate and evasion, but empirical evidence finds a robust and positive relationship between evasion and tax rate. And this negative relationship predicted by the Halligan and Sadmo model, due to the fact that it is counterintuitive and lacks empirical confirmation, is referred very often as Izaki paradox or Izaki puzzle. And the Halligan and Sadmo themselves were the first to recognize that their model failed to catch all the underlying motivation for tax compliance. In fact, the authors themselves state that this is a very simple theory, and it may perhaps be criticized for giving too little attention to non-pecuniary factor in the taxpayer decision on whether or not to evade taxes. In fact, the Halligan and Sadmo model is mainly focused from a perspective point of view on one principal element. Try to identify the optimal anti-evasion policies, principally increasing the control, increasing the dimension of the fine. But doing so perhaps forgets an important part of the story. Those who have paid taxes and who perhaps merit more attention in fight against evasion, which is realized not only by the deterrence of the evaders, but also, and it is important, by trying to encouraging tax compliance. And this consideration let as the fact that there are some individuals who pay taxes only because they are scared of the possible expected penalty, but near to them there are individuals, taxpayer who pay taxes simply because they think that it is fair due to some form of intrinsic motivation. We call this this form of intrinsic motivation tax moral, and we can define following the definition of OECD tax moral as a measure of taxpayer perception and attitudes towards paying and evading taxes. And therefore, we know that the only system of deterrence represented by the system of control and punishment alone cannot explain the high level of tax compliance. And in fact, we can see that we can see a high degree of compliance. In this context, tax moral could be an important factor influencing and thus explaining the tax compliance, the high level of tax compliance. And following the pioneer paper of Gordon, several papers have included tax morality into standard models of classical models of tax evasion. And in fact, they acknowledge that individuals avoid tax evasion not only due to the fear of getting caught and subsequently punished, but also for moral and social reasons. Individuals have an intrinsic motivation to act pro-socially in order to avoid social stigma. And following the paper of Latimer and Sigman, we can define the tax moral as an umbrella that capturing non-pecuniary motivation for tax compliance, as well as factors that fall outside the standard classical expected utility framework. And following this paper, this contribution, I present very briefly the 5 important channels through which tax moral can influence a country's tax compliance. And it's important to stress that all these elements represent an additional term in the utility function of taxpayer. The first element is the intrinsic motivation, and which can be considered as an additional term in the utility function of the taxpayer, and this intrinsic motivation can lead an individual to pay taxes. And the second element is the reciprocity, and that is derived from the fact that from the payment of taxes comes additional comes additional utility for the individual, and this utility is strictly related to the relationship between the taxpayer and the state. In particular, we will see on the quantity of the public goods and services provided by the state, or in general on the perception about the fairness of the tax system. We can consider also the peer effect and social influences that can increase the taxpayer utilities in paying taxes. And this element is in relation to the opinions or behaviors of the other individuals in the society, in the community. And it's important also to consider the long-term cultural factor that may influence the willingness to pay taxes. And finally, the presence of imperfect information, or also the fact that the individual may deviate from the utility maximizing behavior because there are some times of bias probably in the decision process of the agent. And starting with the intrinsic motivation is I try to skip some part. It's important to stress, for example, the contribute of Alm and Togler. We stress the ethical dimension of taxpayer. In fact, they may have personal moral rules, may incur psychological cost if they not pay taxes, and they can feel satisfied with themselves for being correct and paying all taxes. In addition, Tolger showed the important role of the religion as a potential factor affecting the tax moral, and therefore the increase the tax compliance of the taxpayer. And based on a kind of social contract a la Rousseau, there is a close two-way relationship between a taxpayer and the state. In fact, the taxpayer may see taxes as doubt death of a relationship with of the social contract. In fact, the payment of taxes is a necessary condition in order to obtain financial resources for goods and public services provided by the state in exchange. And this view of tax compliance suggests that tax compliance may be influenced by perception of the lawfulness of the state to impose tax payment, but also by the trust that the citizens place in general in public institutions. For example, Feldenfrey stressed that the relationship between tax authorities and taxpayer goes through an implicit or psychological contract. Therefore, the more strongly the political participation rights are developed, the more important this contract is and the higher tax moral is. And in fact, we can see that exists a positive correlation between measure of institutional quality, trust in government, and satisfaction with public service and tax compliance. And this positive relationship is confirmed, for example, by Orbach et al. And they show that transfer that there could be a positive reaction by our brains when we make payments intended for a good cause, and in this case also for taxes, when we consider that taxes are intended for a good cause, for obtain a good quality and quantity of public goods and services. And this strange result highlights an interesting point of the reciprocity. Our willingness to voluntarily pay taxes increase or decrease in relation to the goodness and effectiveness of what the state decides to do with our money. And regarding the specific case of Italy, Dattoma uses historical data from the unification of Italy to the Second Republic, and it showed that the unification and fascism had a very important impact on the Italians' perception of the state. Italians do not trust in their institutions and fellow citizens, which reduced their willingness to pay taxes. 5 minutes?
Yes, 5 minutes.
Okay. Okay. And regard the peer effect and social influence, Benabu et Tirol point out that people are very interested in the people, in the other people's opinion and other people's image of them. Recently, Di Giacchino and Fichera analyzed tax compliance and tax moral in a network analysis context, and they show that if all taxpayers in the network update their intrinsic motivation based on the tax moral of their neighbor, they can all converge to a common tax moral in a corner situation in which all taxpayer evade or all taxpayer pay all taxes. And regarding the social stigma, Goffman defines stigma as an attribute that is deeply discrediting, and in this context, social construction processes are essential. In fact, the social stigma occurs as a discrepancy between virtual social identity and actual social identity. But it's important to stress that the result of and the definition of social stigma is the result of a rational process. And that because it is the society in which we live that defines what is deviant and provide the context in which negative judgments are made. And regarding the cultural factor, cultural refers to a general social norm that persists over long periods of time, and that there are transmitted from one generation to the next. And the payment of taxes can be considered as arising from the cultural background if these elements reflect social norms that persist for a long period and survive for several generations. And finally, the final element is the presence of imperfect information. And the prospect theory postulated by Kahneman and Tversky has become a fundamental element in behavioral economics, in that consider inserting in the decision process of the taxpayer the psychological component. And this methodology studies not so much the behavior of a rational taxpayer, but the choices that an individual as such makes. And this model is very useful because it tries to understand, explain why many taxpayers do not report less income than they actually earn, despite the fact that it will be more convenient for them evade partially or totally their income. My presentation is over. Thank you very much for your attention.